I used to think the main thing that I needed was a better trading setup. I'd find a trader on YouTube, watch them break down their entire entry model, and honestly, it looked pretty convincing. The chart example made sense, and the explanation behind the entry, the logic behind the entry system, was pretty good. Now, I did this with hundreds of different YouTube setups, and to be honest, most of them probably weren't that bad. Some were based on breakouts, some reversals, some used indicators, and some were just simple price action ideas. Most looked like they genuinely had some potential. But after a while, I started noticing the same problem amongst them. What I was getting from these videos were entry ideas, but they were not a complete trading system. The video would show me where the trade started. It would show me the candle, the level, the indicator signal, or whatever the entry trigger was. But once I started to trade these YouTube setups in a live environment, I realized that there was a whole layer that was missing from it. I had the entry, but I still had to figure out how much to risk per trade. How to calculate how exposed I already was, or how many trades that I could have open at any one time. And that if I was taking multiple setups, I was simply taking the same trade on a different chart. Also things like what kind of drawdown I was willing to accept, and when I needed to stop trading altogether. Now these were just the surface level of some of the decisions that these YouTube setups were not giving me. I also had individual trade decisions that needed to be made. Things like where my trading setup became invalid, where the stop loss placement made sense, whether my target was realistic, and what happened when the setup looked a little bit messy and it was unclear. So the issue with these YouTube setups that I found is that the actual entry system was not rubbish. Some of them were quite good. The problem was that the setup was only a small part of something that was much bigger. And that is the exact distinction I want to get to in this video. Because a setup can look great on a chart. It can produce profitable winning trades, but that does not mean that you have a trading plan. A trading plan is not simply an entry system. A trading plan is what decides whether that entry setup can survive being traded over and over again in the real life market without the whole thing falling apart. And for me, that was a big shift because I stopped looking at entry setups as if they were an entire strategy and started looking at them at one piece in a much larger puzzle. Because the setup might get me into a trade, the trading plan is what controls risk, total exposure, drawdown, trade management, and whether the actual trading system can stand up over time. Now, the reason that this took me so long to realize is that trading setups look very convincing in hindsight, especially in YouTube videos. When somebody's conducting a post-op or some sort of backtesting or trade, they're explaining things after it's already happened. This is after the messy part has been and gone. But what you're not seeing is the uncertainty that unfolds with each candle. You're not seeing the time that people spend wondering whether the move has already gone too far or whether it's still valid. And you're not dealing with the emotion of having real money on the line. You're looking at an already completed chart with the clean parts circled and the important bits pointed out directly for you. So of course it's going to feel obvious. The entry looks obvious, the stop looks obvious, and the profit target looks obvious. But that is not the same environment that you're in when you're trading live. When you're trading live, the trade is still forming, the candles are still printing, the market is moving. You might already have risk on. And instead of calmly analyzing an example that's already been and gone, you're sitting there in real time with real decisions to make while the market is moving. And this is why I think that an entry setup alone can be a little bit misleading when it's taught in isolation. And it's not because people teaching them are necessarily wrong about these entry setups, but it's because a finished example removes most of the uncertainty that makes a trade hard to manage in real time. Now, I want to talk about something that I remember reading years ago in one of my trading books up behind me. Now, I can't remember the exact book that I read it in, so I'm not going to sit here and pretend like I've got a citation sitting in front of me, but the story really stuck with me, and it really challenged the way that I thought about trading setups and trading entries. So the example was something along the lines of getting people, and I think it might have even been children, to choose whether they wanted to be long or short for the day, simply by looking at a chart. A very simple call. They had to choose up or down for the day. Now, the interesting part obviously wasn't the entry logic because there's very little logic here. And the entry system obviously wasn't amazing. But the interesting part about this experiment was that once they put proper risk parameters and turned this basic entry system into an actual trading plan, the results were far better than what you would expect. Now, from memory, the point was that it could even be profitable under the right conditions, which is a lot better than what we would expect. You would expect a somewhat random result if you're simply looking at a chart and picking up and down for the day. Now, I'm not bringing this up to say that your trade entries do not matter, because they do. In my own trading, I still want a pattern that's proven to be profitable over the long term. I still want something that's simple and repeatable. I still want something that actually has a reason for existing, something that you can explain in a single sentence. But the example that I just spoke about really changed the amount of weight that I was placing on the entry by itself, because it showed me and really reinforced the fact that the entry is only one small part of the entire equation. A good entry with terrible risk parameters put around it can still blow up your account. A decent entry with controlled risk, controlled exposure, and a clear invalidation level has a much better chance of surviving long-term in the markets to actually be assessed properly. Now that was the shift. I stopped looking at trading like the whole game was finding the perfect place to get into the trade. Now the entry matters, but the system around the entry matters just as much, and in some cases, maybe even more. Because if you risk too much on any one trade, then your entry needs to be almost perfect just in order to survive. If I take 5 trades that are all betting on the same market move, I'm not diversified just because the ticker's different. If I keep trading even after I'm in drawdown, or if I don't know exactly where my original trade entry idea becomes invalid, I'm probably going to make those decisions emotionally once the trade starts to move. And that's why I think beginners can get stuck chasing better setups for a long time. I know I definitely did. But at some point, I had to look at the bigger question. Even if this entry idea has potential, have I actually built the right environment where it can work? Because that's the part that a YouTube setup usually can't give you in one chart example. It can show you the trigger, it can show you that the trade worked out, and it can easily show you why the move made sense after it's happened, but it can't give you the risk model, the exposure rules, the drawdown limits, the market filters, the decision-making filters, everything that decides and underpins whether this entry is worth taking again and again. And once I saw things this way, a lot of strategies that looked impressive at first started to look a lot more incomplete. Not necessarily bad, just incomplete. They had the front door attached, but I still didn't know whether the rest of the building could stand up. Because in reality, the same entry setup can behave completely differently over the long term depending on the plan that's put around it. A setup can vary in the amount of risk per trade. A setup taken after I've already breached my drawdown limits is not the same. But a setup taken within a proper risk model with exposure controlled and clear rules for when I stop trading is a completely different thing. And that was the part that I had to get my head around. The entry might look identical on the chart, but the actual trade is not identical if the risk around it is different. So the plan became the thing that protected the entry from me. It gave me the setup boundaries. It told me when the idea was allowed, how much damage it could do, and how many similar trades I could stack, and when I needed to step away. And for me, that made trading so much less dangerous. Because before that, the setup would appear and I'd be in while I was still working everything else out live. How much risk do I put on? Is this too similar to the trade I'm already in? Am I adding risk after I should have stopped? Those are not questions that you want to be answering while price is already moving and you're already in. By the time the setup appeared, I wanted all of these decisions already made. And that was a very different place to trade from. And that's where this whole trading thing really started to land for me. The setup stopped being the only thing that I was relying on to make trading work. And it became the thing that had to earn its place within a larger plan. And that was a very different way to look at trading, because I'd spent so much time looking for better entries when the majority of my problems weren't coming from my entries. The problem was that I was taking simple entry setups and expecting them to behave like complete trading systems. And once I saw that and I understood what this meant, it made so much more sense why so many trading setups look great online but fall apart when you actually try to trade them. And that is the point that I want you to take away from this video. A setup is not a trading strategy. A setup is simply the thing that gets me interested. The trading strategy is everything that decides whether that setup is allowed, how much risk it carries, how many times I can take it, what happens when it fails, and whether it can actually survive being traded over and over again. Because no matter how good an entry looks, it cannot fix poor risk management, unclear invalidation rules, or the habit of taking 5 individual trades that are actually just, as my old trading mentor would call it, the same turd wrapped in glitter. And that is exactly why I built the 3XP Academy the way that I did. It's not intended to be a collection of entry strategies, because I've already been down that road, and it doesn't work. Inside the 3XP Academy, we focus on taking one clear, profitable pattern and wrapping an entire trading system around it. The rules, the risk exposure, the invalidation, and the daily process, so that we can take a proven, profitable entry and take it into something that you can repeat day in and day out. If that sounds like the part that's been missing for you, I'll leave a link down below in the description to the 3XP Academy details. You can take a look if you want and see if it makes sense based on where you're at the moment. With that being said, thanks for watching and I'll see you next week.